Snowflake stock is down 19% in the last month, which has a lot of investors asking what's going on with Snowflake stock. So in this brief video, I'm going to go through Snowflake's most recent conference call with Wall Street investors and look at what management said that could provide some insight into what's going on with Snowflake stock. So let's get right into it here. So Chairman and CEO Frank Slootman saying in the conference call that Snowflake's product revenue grew 50% in the first quarter, um, totaling 590 million. That's excellent revenue growth. Net revenue retention reached 151%. Now, net revenue retention represents for what happens with existing customers, right? If existing customers increase their spending year over year, that net revenue retention rate will be above 100%. So a figure of 151% means customers that were spending $100 with with Snowflake last year are spending $151 with Snowflake this year. So they're increasing their spending with Snowflake. And to me, what that signifies is Snowflake is delivering excellent return on investment, right? Because otherwise, clients would not increase their spending with Snowflake. They would say, you know what? We don't like the value we're getting from you. We're going to take our money elsewhere, or we're going to keep our spending the same, or maybe we're going to reduce our spending with you. But that's not the case. Customers of Snowflake are actually raising their spending, and that's really good news. Remaining performance obligations came in at 3.4 billion. That was up 31% year over year. That was both good and bad. It's good that Snowflake has $3.4 billion in remaining performance obligations. These are contracts that Snowflake has signed with customers where they intend to use Snowflake services over the next several quarters, perhaps over the next several years. That's a good sign. The bad sign is that it only increased by 31%, slower than the revenue growth rate, which means Snowflake's customers are using up their services at a greater rate than they are renewing their services. So the RPO is increasing at a decreasing rate. A little bit that's getting a bit picky there in terms of something that's not very good. But when you're looking at a stock like Snowflake, which has a valuation that is very dependent on growth, right? The stock is already pricing in excellent growth in the future. So when you have growth that is moderating, that's troubling because the stock is pricing in that excellent growth. It's not that Snowflake stock investors expect the company to be stagnant or not to grow, right? Investors in the stock market are very cognizant of the fact that Snowflake has excellent long-term prospects, and that's already valued in the stock price, even though it's down significantly in the last month. So whenever you see slight trouble in terms of the revenue growth or growth prospects, that has huge implications for the stock price, and that could be one reason the stock price is down so much in the last month. Adjusted free cash flow of 287 million was up 58% year over year. That's a good sign that the company is becoming cash flow positive on an adjusted basis. This is another troubling sign here. The CEO mentioned that they're operating in an unsettled demand environment, and we see this reflected in consumption patterns across the board. While enthusiasm for Snowflake is high, enterprises are preoccupied with costs in response to their own uncertainties. And this is true of nearly all of the stocks and companies that I follow. They are all looking to cut costs and cut spending wherever they can. And one of the areas that's being impacted is spending with Snowflake, because companies are looking around and saying, hey, where can we cut costs, even if it's just temporarily? Where do we have discretionary power to cut costs? And one of the easier things to cut on is projects like with Snowflake. So that's what businesses are doing. They're telling Snowflake, look, we love your product. We want to stay in business with you. It's just we're facing our own uncertainty right now. So we're going to pause and we're going to slow down for now. Thankfully, the CEO says this may well continue in the near term, but cycles like this eventually run their course. So their long-term prospects remain excellent. It's just in the near term, there's a lot of uncertainty right now. Businesses don't know if we're going to go in a recession, how steep the recession is going to be. So they're cutting their spending, and one of the areas that's being impacted is Snowflake. So for me, the CEO did provide some key insights here into what's going on with Snowflake stock, and something that um, corroborates my research from other stocks and other companies that have been saying similar things to what Snowflake CEO is saying. So it makes sense that they're experiencing these factors, because I'm seeing it in, the 100 or so other companies that I follow as well. All right, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.